All right, gang. Happy Wednesday? Wednesday to you, right? Hopefully, I'm right on that. How's everyone doing today? Welcome back to the New York live trading room. Good day, all. Good day to you as well, Billy. We got a much busier day in the markets today than we did yesterday. Yesterday, there was not a lot on the radar, but luckily we had two good breakdowns. We had a breakdown on Bitcoin to start the day. We followed it up with a nice analysis on gold, which turned into a very, very good trading lesson that I did make into a bonus Q&A. Now, for you guys that caught the bonus Q&A early, I had some issues with the uploading quality. Don't worry, I went back later in the night, afternoon, and changed it. So it is now crystal clear and it will live there forever on the site. But that was a really good conversation. It was about an hour-long training. If you didn't catch it, I recommend you go back and watch it. It was on, I titled it, I had a hard time with the title because I wanted to make sure it was very searchable. But I called it Trend Trading versus Counter Trend Trading and Everything in Between. If you remember, we talked about kind of a hybrid way of trading where you're not confined to only being with trend. You're not confined to being against trend. You can kind of take a little bit of a micro approach where you're more like a mercenary and you're looking for prediction points instead of worrying about being involved with the underlying trend. So good training there. Also, while we're doing some house cleaning, Trader Coffee Break episode out today. Again, every Wednesday, 10 o'clock live over on YouTube, the Trader Coffee Break channel, Jason Grayson and myself. Today, we're going to be discussing trading with multiple accounts. Pros, cons, should you, shouldn't you? Have a nice little water cooler discussion there. News-wise, not too much out today. Again, tomorrow's the big day. This is Thursday you're looking at with CPI and whatnot coming out. Tomorrow's pretty bland, or today, excuse me, is pretty bland. So nothing that we really need to be aware of as far as the news cycle goes. Now, I had a hard time deciding what pair I wanted to look at today because I had a massive amount of breakout patterns. Speaking of breakout, by the way, just to update you, you guys know I had the Euro Yen win the other day. Pound Yen cipher ended up losing, so 1 for 1 or 1 for 2, I guess, for the week. 1 win, 1 loss. But a lot of breakouts on the radar: Aussie dollar, Euro Yen, New Zealand dollar, Aussie Canada. I wanted to go with Pound New Zealand because it's a breakout that has already happened. So I think it'd be cool to start with that. And that way you can get an idea of what to potentially expect from the others. Nope, gold didn't make the cut today, although gold did follow through on yesterday's prediction pretty well. If we take a look at gold real quick. Some of the notes are still on there, right? You can see the break of resistance, retest, and working its way up. So gold's been so far doing what we thought it would do, which is pretty cool. Real quick, Greg says, Coach, I'm looking at a trend continuation on Euro New Zealand. That's going to be, maybe not. I'm going to say probably the same thing we're looking on Pound New Zealand. But then you said price broke above on the daily, is retesting at this time. I'm waiting for a double bottom. Okay, so looking for a bullish continuation. Okay, so let's look at Pound New Zealand first, and then we'll look at Euro New Zealand second, because those are pretty similar, but it looks like we're looking for things in different directions. So we'll do that second, Greg. I'm going to start with Pound New Zealand as my trade of today. And if you guys are new watching on the YouTube channel or TradingView, what you're doing is you're getting a sneak peek inside my live trading room where we spend about 2 hours looking at trades, breaking down opportunities, having good discussion, talking about robot apocalypse, all that fun stuff. But I want to invite you into the first trade to get a sense of what we're doing and what live trading actually looks like, because you get a lot of people out there that are given the wrong message. So I think it's cool to get the right message. So let's start on Pound New Zealand, right? Pound New Zealand, right? You can see that we have recently broken and closed above a previous level of structure. We came back into another level of structure, level consolidation, and price action started a tight consolidation, right? You can see over the past, about week or so, 1, 2, 3, 4, 5, 6, 7 days here, the market shuffled sideways. And then what we started doing today, right, is we started breaking below the lower level of support. And that's going to be crystal clear here in the 4 hour, right? Let me know if you guys can see this. The market comes down and bounces and bounces and bounces and bounces, right? Hits the floor, hits the floor, hits the floor, hits the floor. And then finally, we're breaking out of that. Give me a yes if that's crystal clear on your chart. Ooh, we got someone looking forward to pound New Zealand as well. Breaking out bullish. Yeah, I am seeing breaking out bearish, but we could be looking at two different types of time durations. But I'm looking at the bearish breakout here. But again, it depends on what time duration we're looking at. And probably the same thing for Greg with the Euro New Zealand. I don't remember that one too much, but we'll see. So we got to break out to the downside here, right? So I can identify a break below a previous level of structure. We haven't closed yet. So obviously we always want to wait for the close for our final confirmation. But we can start setting up our predictive analysis early, right? You always want to kind of visualize and kind of map out your plan of attack, right? If then, that wonderful if then syntax. If we break lower, then I look for this. If we break higher, then I look for that. So we can see that, and hey, currently we're trading below. So if we assume a break and close below, right, we know that we can then make the prediction that price is likely to continue lower. So the prediction process is a 3-point process. It is a 3-part process, I should say. It is which direction is the market likely to go? Where is the market likely to go if it goes in that direction? And then how is it likely to get there? So the first one's pretty simple, right? It's rules based. Lower, low, lower, close, predict lower, right? Now, this is where I want your guys' help, right? Next part of prediction. If we're likely to continue lower, then where are we likely to continue lower to? Shoot me some ideas. Shoot me some numbers. I put out a tweet this morning. I said, it's crazy. So I've been trading for about 15 years, right? And I get just as excited today and tomorrow as I did 15 years ago to enjoy the presence of the market. Now the excitement is a little bit different, right? The excitement back then was like, yeah, make money, make money, make money, make money, make money, right? And now I'm excited about doing analysis and talking to other like-minded traders. I didn't have that when I first started. I was kind of on an island by myself. I had no one else that knew about trading, so I was, couldn't share the excitement with anyone. But it's pretty cool. It's pretty cool that none of that has weared off. It's just like it's still exciting, still warms the heart, which is awesome. That's what you want. That's the one advice my dad gave me when I went into trading. He's like, son, I have no idea what the hell you're talking about, but do something that makes you happy. And if you fail, you find something else that makes you happy. I was like, okay, all right, that works. So pretty cool. So got some numbers shooting in. Let's see what they say. I got 2024. Let's bring some horizontal lines in there. Drag them down. 202.40s, which is going to be right about here. I got 202.20s from Orsi, which is a little bit lower, right around there. We got 202.23s, 202.13, 201. 36. You're right around here. So this is what you want to do in that process, right? You want to start predicting and using your skill of analyzing the market of where do you think price is likely to go next. And that's going to tell you if there is indeed opportunity, right? I remember we talked about, it might have been Bitcoin yesterday. I think it was Bitcoin. We talked about where, hey, I like the potential for a bullish breakout. I just don't think there's any opportunity to the upside. And all that is measuring out your predictive analysis, measuring out where you think price is likely to go, and saying, does this thing have legs, right? Does it have room to get there? And sometimes it doesn't. If it doesn't, you're like, oh, well, cool setup, just not enough room for me to actually make profit. If it does, then you know that's something you can follow up on and invest more energy. So the level I had in mind was this structure swap right in here, right? if we go back and measure kind of the ebbs and flows of price action, right? We can see price action came up, little head and shoulders action right here, came up, had a consolidation before a breakout, right? So previous level of resistance right here, broke out of it, came back to test it. Nice little structure swap area right there, right? This is the area right here, this structure swap, the area where previous resistance turned to support. This is my next expectation on where I think price action is likely to go. So we got the prediction of what direction we think price is likely to go in. We made the prediction of where we think price is likely to go in. Now the next one is how is it likely to get there? And of course, you can do more things here, right? We can kind of shortcut this a little bit because I already know a preferred level for me. But we can do stuff like draw in Fibonacci's, right? Shouldn't shortcut, right? Fibonacci's, swing low to swing high, right? We got a 50 burger right in there. 50% Fibonacci retracement right there, or 50% retracement. 50 is technically not a Fibonacci number. We have a 618, a little bit lower, right? 201.65s, right? We're going to bring in our volume indicator. We can look for key levels, right? Swing low to swing high right here. We know where most of our volume is going to be at, right? Where's most of our volume going to be at, guys? And I'll get to your question in a little bit, Greg. Not the swap, not the swap. This is a tough one because we're still new to experiment with this. If you're new, we're on a. I took a year to experiment with volume last year. I'm taking another year with a different type of volume indicator this year. So we're doing a lot of observation. Yeah, the upper level, right? The consolidation, right? Consolidation, high volume, right? Consolidation here, high volume. Again, those consolidation breakout levels are going to be the highest. You can see right around that 618, right around, I forgot who said 202s, right around that area, right? So you can bring that in for some confirmation as well. Real quick, Greg says, I think the difference between New Zealand dollar, gosh, I had that on mind. That is a trade on the radar today. I think the difference between the pound New Zealand and the euro New Zealand is the location. I think euro New Zealand still has some room to go up, while the pound New Zealand seems to have reached the top and is more likely to go down from here. And then Greg says, how? Sorry, I'm late to the question. How? What was the how for, Greg? I'm late to reading the questions, so I apologize. But we'll get to Euro New Zealand next. We can compare. Seeing what's going to happen both on Friday, would you enter New Zealand yen, pound New Zealand? I keep saying New Zealand yen, pound New Zealand today. Yeah, it's not Friday, right? Today's Wednesday, so I can care less with what is happening on Friday. So yeah, if there's a technical reason to enter, yeah, I'm not gonna, tell you what. If we're avoiding Friday, what's telling us that we can't avoid next week? What's stopping us from saying I'm not going to enter a trade right now because of what's going to happen? Sorry, what's going to happen next Wednesday, right? Like how far does, if we're fearing a news event or anything like that, how far do we wait, right? That that is FOMO, right? That is FOMO, right? We cannot now. If you have a rules-based reason for avoiding, right? And it's a consistent rules-based reason. So like, let's say you say, I stopped trading 15 minutes before news events. I can't start trading until 15 minutes after. Or, hey, I don't trade 24 hours before a non-farms or an interest rate statement, right? That is fine because it's rules-based, right? So if your rules say, I don't trade 48 hours before blankety blank news event, then that's fine. But if you're just making it up because you're a little nervous, that's going to be a negative. So it's not a bad problem to have a rule. You just want to be consistent in your rule. My opinion is news is not, especially on the higher time frames, news is not as intimidating as it seems. Right? I used to know people that avoided every single news event, and guess what? They never actually traded because every time they had a little pocket to trade in, it'd be another news event. So if you're worried about, and I'm assuming what's a GDP you're worried about on Friday, if you're worried about it and it's a rule, don't trade it. I don't see any reason to be worried about it. So yeah, if this is not a pair in my portfolio. But yeah, if it gave me a good trading opportunity today, yeah, I want to take it. I want to take good trading opportunities. They don't come too often, right? They don't come too often. So I want to take them. All right. So the next step in our process, again, we predicted what direction we're likely to go into, where we're likely to go, how we're likely to get there. That's the next one. And that's when you refer to your trading plan. We're all a little bit different. So for example, me, I am a pullback trader. I can trade breakouts as well, but very rarely do we get one that is tradable for me. I'm a pullback trader. So I'm looking at, just like we did right here, this structure swap, right? Previous resistance turn support. I'm looking at this powerful level of support right here. And now that it's broken, I'm looking at it to be resistance. And if we retrace back up to that level, that would be an awesome opportunity. Look for a pullback and an extension down to my target position. We could sideways consolidate. We could put in a flag pattern or something like that, and you can look for a breakout. So different ways we can take advantage of it. What you want to do is you want to refer to your trading plan and ask yourself, what is the way that I can trade? How can I trade? Am I a pullback trader? Am I a breakout trader? Am I a this trader? Am I a that trader? Real quick, I didn't measure this earlier, but it looks like an AB equals CD as well, just to mark your charts up a little bit more. Oh, yeah, look at that. Oh, baby. Oh, that's what I like. Let me unmute the mic before you think I'm weird. Oops, I never muted it. Sorry. Oh, insert the Homer Simpson drool. Right? That's weird. But yeah. So good trading opportunity here. One thing that we would do as well, and I hope I don't get in trouble on TradingView for this. If so, I apologize. But for a day trader, right, this is the same thing. So for a day trader, we're at this zone. We know that we're our completion point, right, where we're looking for price action to go to is about 202.40s, right? So if we were to load up a range bar chart, and they have them on TradingView, I just don't like the way they look. So I prefer to use my own, right? But as a day trader, right? So this is our ultimate destination. What did I say? 202.40 right here, right? This is your zone. Any type of fresh break and pullback is a trading opportunity. And same thing if we retrace. If we retrace, that zone gets bigger. But even if we don't retrace from here, any type of fresh break and pullback, trading opportunity. Any type of fresh break and pullback, trading opportunity. Any type of fresh break and pullback, trading opportunity, until we reach that ultimate destination. You'll probably see something similar, again, if we go down to like a 5 minute. Again, I prefer the range bar charts for reasons that you guys understand. But same thing, if you're a day trader on the 5 minute chart, just keep looking for fresh breaks. You know, something that may happen here, it's really early, but something that would be a very good setup here in the 5 is what? What is this? What could this potentially be we're setting up? I'll give you a clue. It's one of my favorite patterns. 24 hours is becoming my rules. I don't trade on the day that the news is out. So here's a question for you. Which news events do you avoid? Because news is out every day. What news events are you avoiding? We can have a little bit of this conversation. So while you're doing that, because I know YouTube is on delay, so you're not going to hear it for a little bit. But what news events are you avoiding? Because if you're avoiding 24 hours for every news event, there's a news event every day. So your clock is going to continuously reset. So what news events are you avoiding? That's an interesting discussion, right? So yeah, descending triangle, right? If we push up, if we refuse to meet or break the highs, right? We could be putting in a descending triangle, which is my favorite. You guys know it's my favorite pattern, descending or ascending. Right? My bias. My favorite pattern to trade. Perfect opportunity to gear up for a breakout, or again, just wait for the fresh break and the pullback. Duncan says, loving the squigglies on my chart. Thinking your son has controlled the mouse. I've gone. TradingView never should have gave me this tool. They never should have gave me this tool, right? They told me if I mark up my charts, they you know what, Duncan? They yelled at me, right? They, meaning the internet world, they yelled at me. They said my charts were too plain. They were too simple. They were too clean. There weren't any indicators and moving averages and Fibonacci spirals. So I in order to fit into this trading world, I had to draw a whole bunch of stuff on my chart and make it seem like it mattered. I had to draw trend lines and this and that so people thought I was a real trader. You can't possibly be a good trader with that clean of a chart. The thing is, right, you guys know the centerpiece of my trading is this. Or let me ask you guys, what is the centerpiece of my trading? What is the if I can what is the thing that matters the most on the chart to me? Yep. Price. And structure is part of price. Price, yeah. I can do it. I can do everything I need with just price. Everything, price tells me everything. It gives me all the information I need. Now, again, supplemental stuff like, I love me an RSI. I love me an RSI. I don't mention it as much here in the room because I've gotten into autopilot and I need to stop doing that. Because I keep forgetting. Sometimes I go into straight kind of autopilot Akil trading instead of Akil teaching mode. So I need to get better at that. But yeah, and like an RSI, ATR, I don't need to see it. That's the most important indicator for me. So yeah. Naked chart. Now, real quick to the news question. News events I avoid: clustered high impact news. So I would say this, and this is very rarely does a news event affect the market. So if we're gonna, and it depends on how you identify high impact news. If you're identifying high impact news as something that is red on your economic calendar, for example, I think you're going to miss out on a lot of opportunities, especially if you have a 24-hour rule, because most of the news that comes out has zero effect on the market or minimal effect on the market. There is only a handful. And something to put it in perspective is I would challenge you to do this. I would challenge you to go back over the last week, month, years of your high impact news events, right? And see if the market actually moved. And what you'll notice is that there is only a handful of particular events that will move the market. And those events change over time, but there is only a handful of events that move the market. So you may want to reconsider avoiding all red news because you may be self-sabotage yourself by missing opportunities out of that fear of being in the market. Now, again, certain red news events, yeah. But here's an example, though. And I think we need to do a better job of kind of classifying high impact news events as well, because we talk about Friday, and if we're avoiding GDP, the Forex factory doesn't necessarily have it as a high impact news event. Now, that doesn't mean that you can't, right? I don't think you need to pay attention to how these calendars rate it because it's always going to change. It's always going to be late, I should say, right? Forex factory won't turn GDP to red until GDP has shown that it's had a massive impact in the market. Forex factory won't turn GDP back to orange or yellow until the market has proven that it doesn't care about it. So it's always going to be delayed, kind of like the indicator is going to be lagging. And there's nothing wrong with that. There's no other way to do it. You can't predict the people's reaction to it. But you got to be aware of that. Sometimes you're going to have orange news events that are really major. Sometimes you're going to have red news events that don't really make a difference. Examples in the USD tomorrow, GDP Friday, all reds grouped together. As long as you have a solid rule, that's all I would say. I'm not here to tell people how to trade. I'm here to give advice. But if you have a solid rule for it, then yes. But in general, I think too many people give news events too much credit. I think you give news events too much power, and they don't nearly have the impact that you think they do. Most of them. So just keep that in mind as you go on to study, as you go on to do your research, and especially for you newer traders, instead of automatically coming into the market and fearing news events and saying that, hey, I can't trade 10 minutes before this event or 10 minutes after this event or this and that, and you find yourself in kind of a stop and go pattern, I think you should take some time to actually do some research and see if news events actually affect the market in the way that you think. And I think you'll be surprised with your findings. Now, that being said, time frame matters, right? So, is news going to have a higher impact on a lower time frame trader or a higher time frame trader? What would you guys say? Doug says you can add tested news events to your CTS score. Yes and no, Duncan, and I'll talk about that in a little bit. But yeah, a lower time frame trader is going to be more affected by the news events, right? So if you're trading on a 5-minute chart and CPI comes out tomorrow and has a 20 pip hop, right? That could be devastating to your trade. I mean, it can help you as well, but that movement, 20 pips on a 5-minute chart, is a significant movement. Does 20 pip? Do you even notice 20 pips on a daily chart, guys? No, right? So if you're a daily chart trader, if you're a 4-hour trader, you don't even notice the news events. So again, a lot of your time frames will depend on how impactful news events as well. Now, Duncan says something interesting. He said, you can add tested news events to your CTS scoring, and that may help you decide on a bias, but I cannot see any benefit to trading solely based upon news staying out of the market, being in trade. Yeah. And the hard part about this is the hard part, and we had this discussion a week ago. I think I have a podcast episode coming out on it as well because I recorded it. The hard part about testing news and back testing news, I think that was the subject we talked about, is that the impact of news changes, guys. Right? Now, there are certain things that stay similar, right? So like the easiest example is like a non-farm. That changes too, but a non-farm, you can typically expect a move, right? But the other news events change over time, right? CPI, extremely important in our economic situation right now. CPI years ago didn't matter. What's another one? Years ago, average hourly earnings was a high impact news event. It was more important than the unemployment rate, right? Because the thing was, we had people employed, but they weren't making a lot of money. So average hourly earnings was a high impact news event. Does it matter now? Zero importance now, right? So part of the deal with, if you're going to pay attention to news, and I do recommend doing this, is that you need to stay up to date with what news events affect the market. So you need to stay kind of in the loop with, hey, this news event or these news events are going to be impactful. CPI is going to be impactful. GDP is going to be impactful this week, right? Stuff like that. Versus, this is not going to, we have an interest rate decision coming up, right? But if there is no hint of change, if there is no hint of a change in monetary policy, then does that interest rate make any noise in the market? Not at all. But it's still going to be labeled as red because it is an interest rate decision. It is monetary policy. It's always going to be red. But if there is no hint of change or future change, the market will not, it will have no impact on the market. And in situations like that, right, if we're avoiding a good trade days in advance, we're missing a good opportunity for no reason. So it's not as simple as just, seeing stuff and saying I'm avoiding it, right? Again, I think it's better to avoid it than trade it. Like Duncan said, I don't think you should be trading, like trying to betting on news events at all. Yeah. But I also think you should be knowledgeable about what you're looking at. That way you don't self-sabotage yourself. So that's my rant on news. Any questions about news or pound New Zealand? We're going to head over to Euro New Zealand next and compare. But let me know if there's any questions about that. But for you newer traders, again, I urge you to do some research on news first. Don't necessarily fear it. It is, what is this coin thing? Why are people, I don't know what this is. Someone's giving me coins. I don't know what it is. I don't like it. I don't like free stuff. But anyway, I should probably say thank you. But any questions on Pound New Zealand? Any questions on the news? The news. There's no wrong answer, guys. We're just sharing our opinion. So I'm not telling you to do one thing, not telling you to do another thing. My job here as a teacher and a trader is to share my experience and just open your eyes to different opportunities and possibilities so that you can explore. So you know what paths are available, and then you can peek your head into the door and kind of see what's down this route, what's down that route, and ultimately make the decision that is best for you. All right, cool. YouTubers and trading viewers. I don't even know where my trading view live stream went. I will see you guys tomorrow, same time, same place. We do have a busy news day tomorrow. CPI coming out. Hit that like button on your way out. If I missed anything that you said, or if you're watching this later and you have a question or a comment, leave it in the comment section below. Remember, Trader Coffee Break today, 10 o'clock live. Just YouTube search Trader Coffee Break and you'll be over there.